Good day, everybody, and welcome to the fireside chat on empowering small and medium-sized businesses through trade finance. My name's Nigel Ritson. I'm the current president of the South African Chamber of Commerce for Singapore, and I'm welcomed here today by some esteemed colleagues from the trade finance and banking sector, which I'll introduce shortly. Just a little bit of housekeeping. First of all, thanks for your time for today. I think it's going to be really valuable for companies, organizations, businesses that are looking for alternatives around expansion, internationalization, as well as growth, and using various opportunities and different functions that are available in the market, and also understanding how these things work, because I think debunking a lot of the concepts around trade finance will assist businesses in understanding how they can access these different facilities available by our esteemed members of the Chamber. Just a little bit of housekeeping. So we're going to go into the fireside chat where we'll be chatting with Tom and Michelle. And post that discussion, we're going to be doing some engagement around questions and answers at the end of the session. If you've got some questions as we go through the discussion, please put them in the chat at the bottom. And if we have time at the end, we will obviously go through some of those questions and give you the answers to them. If we don't get to the questions, don't worry, we will definitely do it post the event, and we will be in touch with you depending on the question itself. So without further ado, we've got a lot to get through and a lot of information and knowledge to share. So let me introduce our first panelist, Tom from TradeFlow Capital. Tom's based in Singapore at the moment and is an expert in international commodity markets and trade finance with over 32 years of experience. Tom, welcome to the chat. Do you want to just give us a little bit of introduction to yourself and a little bit about TradeFlow Capital?
No, thank you very much, Nigel. It's great to be here today and thanks for the opportunity here to share our experiences. TradeFlow Capital, the idea started in 2016. We launched in 2018, basically looking at the trade finance gap and focusing on small, medium-sized firms. The trade finance gap now is very large. It was around 600 billion when we started in 2016, and now some reports even say around 4 trillion. And so this is a particular focus of interest for investors, alternative investors, putting money into helping trade move for small, medium-sized firms.
Thank you very much, Tom. And I mean, I think this discussion is really relevant, just in our member base, and hopefully a lot of them are on the call today. We talked to about 600 SMEs in our database, unique SMEs. And a lot of those SMEs have come out of, South Africa, looking to expand out into Asia, Singapore, being a hub for Southeast Asia. And I really believe what we're going to discuss today is really targeted at that at that level. How do they internationalize with partners such as yourself? So thanks for that, and thanks for joining us, Tom. Your expertise is always very valuable to our discussions at the Chamber. Our second panelist, Michelle Knowles from Absa. Thank you for joining us today. And Michelle, I know when we started the discussion around this event, Absa was keen to get involved because of your solutions and your options that are available to banking customers in Absa. Singaporean companies obviously are new to Absa, whereas in South Africa, Absa is a household name. But yeah. Why don't you tell us a little bit about yourself, Michelle, your background, and a little bit about Absa?
Thanks so much, Nigel. It's a great pleasure to have this discussion with yourself and Tom. To provide some background, my name is Michelle Knowles. I head up the trade and working capital product function for the Absa Group. Absa is a leading Pan-Africa bank. Our heartbeat is African. We are headquartered in Johannesburg, South Africa, but we are fully operational in 10 African markets, and we have representative offices in 4 countries. So we serve around 12 million customers in 14 countries. I'm really looking forward to today's discussion for 2 key reasons. One, small and medium enterprises, as we know, play a crucial role in driving economic growth and development in South Africa, in fact, across Africa. They really account for a substantial portion of employment opportunities, particularly for individuals that otherwise might struggle to secure jobs in the larger corporations. And as SMEs expand and thrive, obviously they contribute to reducing employment rates and alleviating poverty. And I think the other, and you noted that as well, is we've really seen an increase in trade between South Africa and Singapore. I think growing in the region of 60% since 2018. And we've seen that growth equally across the rest of the markets as well. So we really believe with our footprint and our experience, we are really set up to support small and medium enterprises with access to finance, products and services, as well as business opportunities.
Thanks, Michelle. And, you hit on some really good points there. As a avid South African who lived in Singapore for 4 years and obviously back home now, obviously we've seen an upsurge in SMEs joining the chamber to look for opportunities in Southeast Asia and in Singapore as a point of departure. I think the PM's visit to South Africa in May this year obviously exacerbated that. 30 years of, almost as long as you have experience in trade finance, Tom. 30 years of diplomatic relations between South Africa and Singapore. And I think it is high time, and we've noticed this in our own areas, Michelle and Tom, whereby we've got small, medium-sized operations with good, unique South African or African products that want to internationalize, but it always comes down to, can they do it? And where does the cash come from? And how can that be assisted, or what avenues or what vehicles can be used to essentially enable that process? So yeah, I mean, I think thanks for the introductions, Michelle, and again, great having you here. I wanted to sort of take Absa's lead on this, just from a macroeconomic point of view, Michelle, and some insights from Absa in terms of this SME play, trade finance. Maybe you could just talk to us a little bit about the macro environment, and then we can start looking a little bit more micro.
Thanks, Nigel. It's my pleasure to chat a bit around that. And I think, you've noted, Tom has also noted the importance that SMEs play in driving economic growth, driving employment, and actually the contribution to the country's development. But I think it's well acknowledged the challenges they often face in accessing the necessary financial resources for growth and expansion, the point that you made earlier. And I'll share a little bit of stats. If you look at the 2020 OECD report, a couple of key stats around SMEs, particularly in South Africa. There's an estimated 2.6 million micro SMEs in South Africa, and only around 37% of those are actually considered to be formal. Of the total, 54% are micro enterprises, and 15% of those are situated in rural areas. And whilst the growth of the number of SMEs over the last 10 years has been lower than economic growth, their contribution towards South Africa's GDP and gross value increased from around 18% in 2010 to around 40% in 2020. the reality is, if you look at the current, geopolitical, macroeconomic environment that we're in, there's a number of challenges that SMEs face, and a number of macroeconomic factors that impact SMEs. And I'll just note a couple of the bigger ones. Obviously, the overall economic growth of South Africa affects the SMEs. So when the economy is growing, SMEs will typically find it easier to access market, to access financing. However, during economic downturns and periods of slower growth, they are impacted by slower demand and financial difficulties. This has also an impact if you look at high inflation. That erodes purchasing power of consumers. It leads to higher operating costs for SMEs, and that impacts profit margins and the ability to maintain certain levels. And of course, things like higher interest rates, and we all know that at the moment, really makes it the cost of accessing finance a lot more expensive for SMEs. And all of these have a knock-on impact around the amount of financing and credit available to SMEs. And again, if you look at the current macroeconomic and geopolitical environment we find ourselves in, what SMEs are having to do is constantly adapt to these changes, planning for risks, but also identifying opportunities, because with those risks do come opportunities. And I think we've seen that across a lot of emerging markets. On the export side, and obviously that's very prevalent for today's discussion, SMEs do play a significant role in boosting export potential for South Africa. Exports allow opportunity for growth and expansion, but they need to be supported by understanding what the risks are associated and how they can mitigate some of those risks, and we'll chat around it. But of course, when you look at importing and exporting, the two counterparts are always at opposite end. The exporters will want to receive their money up front. The buyers and importers will want to push out payment terms. So there's often both risks that they need to understand and mitigate, but there's often cash or working capital issues. So if you look at trade finance really provides two big buckets of solution. The one is to help manage risk. So there's solutions that help SMEs mitigate counterparty risk, sometimes sovereign risk, performance risk. Those are your more traditional type of trade finance instruments. If I'm exporting for the first time to a new importer in a new market, I will be worried about, I don't know this counterparty. It's our first time trading. I don't know that I'm going to get my money. If you're on the import side, you're worried about, will I get my goods? Will I get the right quality? That's really what trade finance aims to resolve. The other bucket of solutions is really talking to the working capital or liquidity issues. And there's a lot of solutions around how we monetize receivables, how we monetize payables, really great solutions coming out around where we actually give off-balance sheet financing to SMEs. And we do that by looking at the ecosystem. We actually look at corporate buyers. If they have SMEs that are sitting in their value chain, how can we provide them with off-balance sheet financing at the cost of the bigger corporate anchor? So a lot of innovation happening. There's a lot of products and a host of solutions that we have as Absa that are available to SMEs and help provide them not just working capital, but manage the risks associated with importing and exporting. Trade finance has always formed an integral part of our strategy, being one of the biggest regional banks on the continent. And we do that through multiple ways. We raise liquidity. We're all very aware of the dollar liquidity issues that we have been experiencing. We partner with DFIs to help raise liquidity for SMEs. We provide fully digitized solutions so that we can reduce the cost and increase access to SMEs. But I think what is important is no one bank will be able to solve this issue. I think, Tom, you noted as well, this trade finance gap is massive. We need to collaborate industry, and we need all players, banks, DFIs, fintechs, and other players in the global ecosystem to really help make a meaningful change in the trade finance gap.
Yeah, and Michelle, I think hit on some really good points. I mean, being an entrepreneur myself, not really on an export side, but I've seen it in practice. You talked about the need or the desire of an SME to sort of, get into that space. They might have a really good product, and we had a colleague of ours in the chamber, or a member of ours, that started a really good little tea business, and product really good, well packaged, well presented, and the fear of internationalization it comes with that trust piece that you mentioned, and that risk piece, right? Because you can't make many mistakes as an SME. You don't get many chances. So I've definitely seen that as sort of a pull towards, partnering with organizations that have done this many times and sort of mitigate or alleviate that risk part when it comes to trust and risk, but still allowing you sort of to internationalize your product. So partnering with someone that is definitely the way to go in the beginning. Michelle, thanks for the information. Tom, over to you. Your experience with the African market. I mean, Tom, you're an international player. Got a good old British accent, is it? But based Singapore, hub of Asia. What has been your pull as TradeFlow Capital into Africa? What has been your experience? And sort of edging on, obviously, what Michelle's saying. Maybe give us a few insights into your experience.
Well, yeah, I think to lead on from Michelle's very good coverage on trade finance, the types of solutions that have been there for a long time, and the very important role that banks play in making the international and African trade system work. To lead on that, I mean, back in 2016, when we first looked at the growing problem for SMEs in international commodity trade, that was the first thing we looked at, because banks want to lend, banks want to do things and make things happen. So when we looked at the data from some of the DFIs and bank organizations as to why there was this gap, I think when we distilled the problem, it was the lack of data. A lot of yes, I mean, because the transactions, the domestic and international commodity trade that wasn't happening for SMEs, it wasn't that the transactions were bad transactions; they were good. Sometimes, often they were maybe too small in certain jurisdictions for certain size banks with their focus. Often it fell over anti-money laundering or know your customer counterparty, and more often than not, it was just the fact that despite the principles of those SMEs perhaps having decades of experience, they'd only just set up the company a few months ago. So there just wasn't the audited track record that banks need and financing needs typically to be able to do the credit scoring and assessment. I'm generalizing, of course, but that was the general crux of the problem. So when we looked at that, we realized that, well, what do SMEs want to do? What they really want to get done is they want to move stuff around. They want to sell stuff or buy inputs for their businesses. If they can't borrow the money, they can't do it. So, as commodity, as a team of commodity traders, shippers, lawyers, and financiers in the team, we looked at the problem and basically said, right, okay, well, what they need to do is just do the trade. So that's where we talk about transforming risk and enabling trade as the kind of our core DNA. And so we said, okay, simple, don't lend them money. So we'll just buy the commodities or what they need for them, or if they've got lots of inventory and they need to free up capital, we'll buy their inventory and free the cash up for their working capital and things like that. That was the easy answer. The difficulty again was, okay, what about the data? We're back to the same big problem. So we then had to become a fintech as well. And so what attracted us to Africa was actually like the telecommunications business in Africa. They hadn't put in the cables for old traditional telephone lines. So immediately Africa gets 4G, 5G ahead of everybody else. So we came in with technologies to help digitize, giving best practice. So giving risk management, CRM, database systems, digitizing the accounting and the import-export management, with our own technologies, giving that to SMEs who would not, would be using a piece of paper or Excel at best because they don't have an IT team. So, and the interesting thing there was that, we are a for-profit organization. We're trying to bring, alternative investors into this space, and as a result, it means that the SMEs, they're building up data, and that we're a neutral principle in the game here, in between their suppliers and buyers. So with their consent, we can actually share that independent trade data with banks as they grow. We're, again, this is where Michelle was mentioning collaborative finance. 25 years ago, 20 years ago, certainly before 2008, I'd be doing this inside a bank. But post the GFC, there's also been big changes in international banking regulations. A lot of even American banks couldn't do proprietary or trading in commodities. So again, a lot of skill sets were lost in a lot of the traditional banks in Europe and the US, for example. But so our attraction with Africa is this was really where we could add big value. So, our investors don't have to demand big returns because they're asset backed. We own the commodities. We're not lending to small businesses, which might have been typically seen as a higher risk. I think and a good example, in Rwanda, there was a group there which was a collective, a cooperative. They were potentially getting borrowing, but double digits. To Michelle's point about hard currency, borrowing money is one thing, but in Africa, getting hold of US dollars or euros to import stuff is a challenge, and additional challenge. So we're able to bring that in from investors, but also we're able to bring visibility and transparency to where things are. Is it still in the warehouse? Is it in a truck? Where's the truck going? So using tracking data and information to bring comfort to investors. Also, the SMEs get to see all this visibility as well, so they're able to improve their supply chain operations. And then insurance companies as well, saying, "Oh, well, where things are." Well, before we weren't really interested in insuring that business, and now we can actually see it on a screen and understand what's going on. We'll underwrite that risk as well. So a lot of spin-off benefits which we never anticipated. And last but not least, I think the other interesting thing was that transparency of data brought trust. And surprisingly, we saw buyers, international buyers, actually for the first time switching and trying new suppliers from Africa, where before they were nervous to do so. But with us as a neutral party, but in the supply chain there, funding and investing in the supply chain at risk and checking and monitoring all the documentation, they were more willing to take that change.
And I suppose Tom, when you've mentioned a few things that Michelle also mentioned, but I liked what you said around sort of the collaborative effort. Both of you suggested that, right? And I mean, Tom, just what you've mentioned now around the ability to track containers and where they are in the world, and typically we're in a downturn at the moment. There's no doubt about it. Globally, we've all got our own problems: Singapore, South Africa, everywhere you go. But I suppose in that typical downturn space, you see people go risk off. But what you guys are coming together with here is sort of a solution where you can still look at that risk, but it's mitigated by technology, by collaboration with big brands, big names, and that sort of risk on can take the opportunity that's there, right? They say in times of crisis, that's where the biggest opportunities exist. And I think, typically 20 years ago, like you say, Tom, investors or people that were trying to enable trade 20 years ago might have said, well, let's pull out a little bit because this is risky. But with the collaborative technologies and what you're doing from a data point of view, I suppose that allows people to go back risk on.
Absolutely, yeah. And I think what we do is risk transformative. We transform the risk,
right.
we de-risk stuff. It's no longer profitable in terms of a bank's balance sheet to hold commodities or items on your balance sheet. You just don't get the leverage you're used to. So it's very hard for banks to own stuff on their balance sheet. So that's where we also can help in that collaboration, is where we're hands-on monitoring, looking after those products, making sure they do get to their destination. And if something goes wrong, be the guys that can work out the transaction. Whilst the bank can also come in and, through us, also leverage those transactions, but knowing that, it's the risk is all managed physically in the world.
Yeah, and I'm keen, Tom, to also delve into. We've spoken a lot about sort of exports out of South Africa into places like Singapore and Southeast Asia. What is your view on the reverse? So, we've had a number of trade delegations out to South Africa. There's a lot of interesting businesses in Singapore, food processing, food manufacturing businesses. There's actually a big trade delegation planned for next year, May. About 50 candidates are coming out to South Africa to sort of show their goods, whether it be coffee, or whether it be seafood or frozen seafood type opportunities. But there seems to be a lot of interest in the gateway to Africa, which is South Africa, dropping it in here and then taking it up into Africa, right? Sort of replicating that whole Singapore concept of gateway to Southeast Asia. What are you seeing in terms of trade the other way around? So trade finance and the requirements of trade finance from Singapore to South Africa.
Sure, yeah. Well, we've had a couple of interesting cases there. So this is where certainly, we've seen quite a bit of volatility even in fertilizer and chemical fertilizers, key inputs to the agri sector in Africa. At one point, China, banned some exports of particular chemical fertilizers, and then people had to quickly try to source other stuff from elsewhere in Asia. So we've been supporting companies in Africa to source large enough volumes. So the idea there is that we can actually invest and buy larger quantities of these farming inputs, for example, for African growers and cooperatives. You mentioned tea, so we're working with some tea organizations and stuff. The nice thing about that is that they're able to buy on a bigger volume and schedule things better. Gives them higher margins, so that also helps in terms of increasing margins and towards poverty reduction, things like that in Africa. But also they don't have to finance the whole lot, so we're able to ship it in, hold it in bonded warehouse, store it, and they're able to then draw down and buy and use that stock over a period of time, all covered by insurance. So again, this is where we're able to help there. Another example was where actually in South Asia, buyers were looking at red beans in Africa, but they were always buying from elsewhere. And so we stepped in and we were able to give the confidence through our boots on the ground, as it were, due diligence of the farmers and the growing and the specifications of the goods to help them for the first time. This was out of Rwanda, first time export into South Asia, where they had not previously just been selling to World Food Programme or local buyers.
Yeah. I mean, Michelle, I'm keen on your insights on that piece. Obviously, Absa being, Pan-African, you've got a significant foothold in Africa. So South Africa is a piece, but the big opportunity, I think, is in the forgotten billion, right? In Africa, and subsequently, obviously, in Southeast Asia, 600 odd million as well. But in terms of Absa's insights that you're seeing in the SME front, companies from sort of Singapore making contact with the likes of Absa because it's the household name in South Africa for Africa. Are you seeing a bit of activity there at the moment and internationally?
Yeah, I mean, definitely. We attend a number of engagements and industry forums, and what has become very clear to us over the past probably 2 years, 18 months to 2 years, is you noted earlier this de-risking that happened on the continent. And that, of course, impacts SMEs, because when you're in a risk-off, capital requirements, etc., it's often those at the bottom end that actually are impacted the most. And that's, it's views on profitability, because that's all higher risk. That's not necessarily the case. But what we're seeing is a big demand for how even banks in other markets can support their clients that are expanding into Africa, because, of course, everybody is seeing Africa as an expansion opportunity. If you just look at the quantum you noted of SMEs, the youth population, there has been increasing demand. And I mean, we've said, Tom made such a good point. I was reflecting on it, such a good example of the sort of physical information and financial supply chain coming together, creating that visibility and giving greater comfort. And, what we're seeing on our side is a lot more demand for both the liquidity products, so supporting, we're talking cross-border here, but let us not forget domestic. And for us, regional trade equally is important. But clients that are looking to expand, they don't have the cash flow for all the reasons we mentioned. They don't have the balance sheet, but the demand is there, and they need support to just bridge a cash deficit position. Really providing clients then with solutions like trade loans, etc., that allows them to kind of settle their counterparty and give them a little bit of a breather while they're still collecting on their side. Expansion, we've seen a lot of demand around how can we support clients on the risk side to expand into new markets. They're approaching those markets. They don't have track records, but they've banked with us in SA or one of our other markets, and we provide instruments like guarantees. So it gives comfort to banks on the other side to extend additional facilities to those clients. So, a lot of opportunities. I was reading some really good case studies around in certain markets, trades that are happening between Singapore and some of the countries. A lot of Singaporean companies now present in Africa. So there's clearly increasing demand. And I think by banks coming together as well, as the likes of TradeFlow and other solutions, that's how we get to addressing and helping and supporting SMEs. I think as Absa, we're very proud that we remain there. SMEs are a big focus. We also have a big focus on youth and women-led SMEs, and that's where we partner with the likes of DFIs to make sure that we are able to support them through their expansion and growth.
Yeah, Michelle, you touch on a good point. I mean, it's not just about the actual instrument at the end of the day as well. It's also, where do I go? Tom, as an entrepreneur, if I'm sitting in South Africa, I've got a product that's been moving out of Cape Town into the regions, and I'm selling it to, households in Cape Town. I want to take that leap. Sometimes it's about where do I take that leap? And I suppose, Michelle, it's also not just offering the actual service of trade finance, but this is your product and this is where you should be looking to take it as a customer of Absa or as a customer of TradeFlow. That's a right assumption, right? Coming about the knowledge.
Absolutely. I mean, it's not just about financing. It's
No.
about how we support SMEs to expand. And that's things like capacity building. It's around sometimes CapEx that is needed to set up before I even start trading. And what we've chatted about here is very much the working capital side of it.
Yes.
But there's a value chain that you need to support your SMEs with. You know, there's a lot of focus on how do we connect across different markets, working with yourselves, Chamber of Commerce, to say, you know, where we're seeing delegations, how do we make sure that we can connect importers and exporters across the different markets? And I think that's where we can do a lot more work to make sure that we're providing that advisory, not just the financing.
Yeah, it's almost the consulting side, right? It's
absolutely.
Am I ready as a business to internationalize to Singapore, right? And I think as an entrepreneur, you never really know the true answer to that question. And I suppose, you know, colleagues like yourself could advise me if I was ready to do that. Tom, a practical example. You know, let's take it down a notch in terms of the theory, but you know, a practical example of an entrepreneur. At what stage of business does he need to be in? You know, maybe give us a bit of a case study. And Michelle, feel free to chip in. But Tom, a little bit of a case study on your experience for the audience.
Well, I think, the fact is, as early as you can, look at the systems and processes that you're putting in place. Even for TradeFlow Capital, when we first started, you know, we put policies and procedures in place as if we were a large organization. I think you know, banks, you know, will, you know, and lenders, they will look at your policies and procedure. They'll look at your systems, how you keep track of it, how do you control your business, how do you account for it, how do you document for it, and that best practice in your business. So that certainly, I mean, it was necessary to be able to execute our investment strategy to give this technology to SMEs, but it also means that from day one, SMEs working with us, they get the best of breed commodity trade risk management systems, allows them to manage their shipping, allow them to do invoicing, manage all of these things in a secure environment, and also reduce the risk of fraud, which also, again, helps their business, but also gives more confidence to lenders later on once they get big enough and with enough track record. Again, the other approach that we've taken is, we are investing in these transactions. That data is also the SMEs. You know, we're not, you know, we're not doing a social media where everything you put on there is ours. You know, and so the nice thing, being a neutral principle, is that, you know, we're able to share that information with banks and help do collaborative financing. We're working with DFIs in Africa. Again, you know, frustration for a lot of DFIs is that, you know, they have the ability to help, but often they're also resource constrained in terms of how many things they can look at. So we're also trying to interface with development agencies and development banks to say, well, we've built a platform, we've built the technology to do the heavy lifting, the digitization. And where we're bringing that back to your question, Nigel, there, back, say, to Singapore, is in fact working also with Singapore government, working with the digital trade law here, MLETR law in Singapore, the digitization side of things. You know, we're able to help that sort of digital interface between Singapore. And the reason we're here is because Singapore's a massive trading hub. We've got representatives, as Michelle mentioned, from South Africa all over the world here. So it's a great place where you can bump into people from all over the world in the street and start doing business. So which is great. And now more of that business is going digital. So, you know, when Singapore companies are coming to us and saying, hey, you know, what are you doing in Africa? We see you're doing stuff there. You know, how can you help us as almost as a conduit, as a pipe, as a connector as well, to more safely and more with more visibility, sort of start trading into Africa. So we hope that we're not just helping African firms export stuff, but also helping the Asian firms connect the other way around.
I mean,
as
I suppose, Tom, talking to like where we are in the digital space at the moment, I've seen it. I mean, we had a virtual networking event a number of months ago. It was in collaboration with Westgrow in Cape Town. And there was a bunch of exporters that were matched with importers in Singapore. The whole idea of this thing was, do we need to get on an aeroplane and go and see a possible importer of my product so I can meet him, shake his hand, see he's real, and gain that trust, right? And I suppose where you're coming in there is we're moving to a more digital space, and there's a possibility I might never meet that distributor that side in Singapore, or I might never meet the distributor in South Africa. So how can we mitigate that through that technology, which I think is the theme of the day at the moment, is how we can do things much quicker with less sort of input cost as an SME. Systems and processes, definitely. I mean, I think if I was an organization, obviously I know that I need to set up my systems and processes as a part of scale. And I think it's probably coming down to, like, as an SME, if I wanted to start to access trade finance, where would I go? Where would I even start is probably the question. What product do I need? Do I need a consult first? Is this too big for me? Is Absa too big for me? Is TradeFlow Capital in Singapore, so I can't really talk to them? Should be talking to someone locally in South Africa. I mean, you go and type in trade finance in Google and you'll have 30 hits. But it's probably, who do you partner with that is the key point here, because of what you want to achieve. So maybe Tom, and I'll start to close up here because we are running out of time. But Tom, in terms of a point of contact, who do I speak to from a trade finance point of view? Who is it? How do I get in touch with you? And what's the point?
Sure. The quickest thing to start a conversation and also save people's time is that on our website they could actually request. And although on the website it doesn't look like much, behind the scenes that automatically triggers a KYC AML check, downloads information from government databases and creates a file. And then me and my team here at TradeFlow Capital immediately respond to those people and say, yeah, okay, this looks good, or we just can't help you. So we're able to quickly help people look at whether we're able to support them from an investment standpoint. We've got so much stuff going on in Africa, and we've got people, boots on the ground, and people also in that time zone. So we're not too far away, and from being able to get something actioned and reviewed very quickly. Leveraging technology, we're able to assess, whether that fits our investment criteria very quickly. And although we don't act as a broker, most of the time we'll also say, well, that's not for us, but actually you might want to talk to these people, but we're not making a recommendation, but here's a list of names that you might want to talk to. And sometimes, quite often, it's just too big, and we just say we can help de-risk this, but talk to your bank and let's have a three-way conversation with your bank, and we can say, how we can step in, maybe as a first tier loss, or some form of guarantee to also help. Or get involved in the operations to de-risk it if people feel, well, maybe it's too much for for the SME to handle on its own, but they want to grow. It's always the chicken and egg problem.
And Michelle, what's your comments on that? I mean, getting in touch with Absa.
Yeah, look, one point is when you're looking to expand and go cross-border, choose a partner that has a lot of experience in the market, which Absa has. We've got deep experience in all the markets. We understand the regulatory, the infrastructure. I think the easiest way to get through to us is on our website. We will support from advisory right through. We've got very big teams that are focused purely on SMEs in all the markets. So I'm sure we can leave our contact details with you, Nigel, so that if any of the members want to connect directly, they can. But also to Tom's point, there's very, very detailed contacts on our website. And we really do say, reach out to us. We're a bank with many years experience. We don't just do the trade finance. We start on the advisory and CapEx as well.
Cool. I've got 2 questions. I think very good questions, actually. And I think we might only be able to get through these 2. Got a couple more, but we'll get back to everybody after this with contact details and how to engage. And some of the content. So someone's asked for some content just around some of the products available, and a little bit of an overview, company brochure type of thing, maybe from Tom. So we'll get that over to everybody. But a good question here is, as an SME, how far into the future do I need to think about making contact with a organization such as yourselves before I need the trade finance? I mean, I think that's quite a good question. It's like, how far in advance? Because normally when we get to that situation, everything's a rush. I would assume in an SME's world, everything's a rush. And it's, how far do I need to think about this? So is it a 12-month strategy? Is it 6 months? How quick can these things be pulled off? Any comments there? Maybe Michelle, and then we'll go to Tom.
I will echo Tom's point that he made, as soon as possible. Obviously there's certain processes. We've got to go through KYC, onboarding, etc. And once you set up and you have transactional capability, and we've assessed the appetite and limits, then you transact. Then you set up to transact. So when that deal hits, that you've got the limits and the capacity to do that. Nobody wants to be in a position that you're doing this at last minute, especially, given you're trying to expand your business and your reputation is on the line. So I suggest come to the bank rather earlier than later and let us help you through the journey, not at the point in time that you need trade finance.
Good one. Tom, any comments there?
I think absolutely echo what Michelle says, as early as possible, to develop the relationship, get on people's radars, and then there's also be able to scope out and see where the challenges lie, and also understand whether certain organizations can assist, or maybe a group of organizations, such as ourselves and a bank, and together somehow bring the solution that they need.
Awesome. Thanks very much, guys. We have hit time. I could talk about this for a bit longer because it is an interesting topic for me, to be perfectly honest. And I think it is the tool that will deliver on South Africans' aspirations around economic growth, and becoming a powerhouse for Africa. But anyway, thank you very much. Your experience and expertise in both your first facets is really appreciated to bring this type of content to the Chamber of Commerce. That's what we are. We're a platform to educate, put people in touch with each other. And for the people that are watching this video after our live event, there is please inquire through the Chamber on how to make contact with Michelle, Tom, and all how to engage with Absa and TradeFlow Capital. Thank you for everybody joining us today. I think it shed a lot of light on, the world of trade finance, SME, specifically SME, and using, like Tom and Michelle, like you've done, using some practical examples of how it would work in reality. We hope this was very valuable insights to SMEs on the call, and other opportunities that might come out from this discussion, or potential people looking to invest in trade finance. Also, I heard that as a possible opportunity, Tom, in your discussions as well. So to everybody in Singapore, have a great evening, and I hope you enjoyed it. Tom's in town, and to everybody in South Africa, good afternoon. And Michelle is around here in South Africa as well. And have a great evening, everybody, and thanks for your time. Thanks, Michelle. Thanks, Tom.